Good morning, everyone. Happy Monday. It's about 7 a.m. here, February 24th, and prices of BTC currently at 98.26. So it looks like we got a good pop above this previous range consolidation. Um, More often than not, what we've seen, by the way, in these ranges, folks, is once you get a pretty sizable drop, right? So let me turn off this volume. Once you get a drop, look for sort of the first period of consolidation that develops a range high like that and a range low, okay? And more often than not, what I've seen is price likes to take out both the range low like that, okay? And it takes out the range high like that, and it eventually goes on to continue whatever it's going to do, whether it's sort of go up like this, or whether it's going to stop out these people who had shorts with stops up here, and then it's going to come back inside the range and then maybe break down further. Okay, let's recap and figure out what happened yesterday, okay, before we do that. All right, so first things first, I mean, obviously, this movement right here was pretty much unnoticeable for most people, thinking that, okay, this for the most part is going to break back up. But we in the Cryptosomniac community were very careful in this particular region right here. Okay, and I'm going to show you guys the trades that we took inside that movement. Okay, so here's the trade that I took right around. Let's see here. So this is what I was looking for. Okay, I was looking to take a long. All right, so I'm going to show you guys the exact chart. Okay, so we were over here. Okay, I was looking to take a long once I started to see a 15-minute candle close above this range high. Okay, the reason this range high right here, as you can see from this marker, was important because previously, right, we established a range high, we broke above it, but then quickly shot back down under and took out the range low. So I said, okay, there's clearly importance to this level. Okay, now if I get price above this level, I'm gonna long, right? Because for the most part, if I saw it on, say, a 4-hour time frame, it would have been looking to press higher. Okay, now the first sign that I was looking for was I wanted a 15-minute closing above this marker. The other sign that I was looking for was on a 1-hour time frame. Okay, remember the previous week actually had the weekly open. Okay, let me actually clone this, because the previous week's weekly open was actually around 99.34. Okay, so I'm gonna do that so I can show you guys exactly what I was looking at. So I'm gonna make this yellow. Okay, now the reason this yellow marker is important was because for the most part, price was not able to break above this area. Okay, I didn't even take a long on this particular trade because I said, okay, let me see if we can break above this area with conviction, and also at least come back to test it as support like we did right there. And that's actually exactly what we did. So when price gave me that 15-minute trigger right here above range high, I said, okay, I'm expecting higher prices. Okay, the last thing that I want is for price to come back inside the trading range. This is very a strong sign of weakness. Okay, whenever price has broken above a key level, like this range high right here, or say this weekly open right here, the yellow one from last week, you do not want price collapsing back inside that previous resistance that was broken. Why? Because that speaks on the overall weakness of the bulls. Because if price were to show strength, and the bulls are to show strength, what they should be doing is break above this level, consolidate, retest, take off. Okay, we broke above this level, consolidated, retested that level with this green candle, and we should have just taken off. Okay, we should have taken out this key right here, this key high right there, and just blast it off. Okay, my first sign of weakness that I saw was this candle, and I said, okay, I'm gonna give it a little bit more time because this is, again, just a doji, right? It doesn't mean anything yet unless I start seeing confirmation that this, next candle is going to be bearish. And then I saw another bearish candle. This was my first warning sign. The biggest warning sign that I had was right here. Okay, This is where I got out of my position, got out for the most part. I said, okay, you know what, maybe this may not be it, all right? And I saw this on a very smaller time frame, like a 5-minute. And I said, okay, I'm gonna wait for price to show me that it has strength. So I'm gonna tighten up my my stop over here and move my stop somewhere around 99.30. And that was because it was below this wick right here. But you could see this candle blasted through my stop, which was right there. And I said, okay, I'm out. This is it. It looks like we're going to go down further. So I quickly switched my bias from longing this, to short, which I shorted right here. And I made some good gains on this drop right here. Okay. Now let's check that out. Okay. The reason why I'm showing you guys my loss is because I want you to understand that you need to know when to be able to let go of a trade when it's not going your way. When the momentum has faded and it's starting to show signs of weakness, you need to be able to cut the trade and understand that, okay, it might be time to switch bias, because now you're seeing aggressive signs of weakness in the direction that you are positioned in. So this is exactly, you know, what I did, right? I cut down my size by 3/4 as price started to breach back into that area, as you can see. So that was this particular candle before it fully happened. Okay, so in the middle of the candle, I said, okay, I'm cutting my position. This does not look good. Price should not be going like this and then coming back around, because it already did a retest right there. It doesn't need to come back towards this area again. You don't need to do a retest twice. You just, if price is really bullish, it'll go like this, consolidate, retest, take off, okay, if it's really bullish, all right? Same thing with, you know, bearish momentum, right? If price is supposed to break down, it'll kind of just, you know, go like this, consolidate for a little bit, sell off, consolidate for a little bit, sell off, okay? So for the most part, you know, we cut down that trade, and then obviously my stop got taken because of this, you know, red candle right there. And then after that, I quickly switched bias, okay, and we went leverage short, right? This was by far, in my opinion, the easiest trade, because, I mean, if you know what you're doing in trading and you see something like this, you don't, again, continue to go long, okay? This is a clear sign of failure for the bulls to hold up price. This was really, you know, a deviation, and the bears really just, you know, capitalized on this movement right here. They basically loaded up their shorts, trapped the bears, rather trapped the bulls up here in thinking that we're going to go higher, and then we eventually tanked, okay? And I can show you guys on Exo charts real quick, okay? Let me show you guys exactly what I mean by trapping the bulls, okay? So here we have, let me pull up the 1 hour, okay? So in this 1 hour candle, all right, and I'm gonna show you guys, see this movement right here? That is, all right, that is this candle right here, okay? And I'm gonna show you guys exactly what that means. So look at this candle right here. That's this candle, right? Look at the buys all the way up to the top. 11 million, 5.8, 5.6, 3.1, 4 million, 2.3, 8.8, all these, you know, multi-million-dollar buys right here were trapped all the way up here, right? And so when price started to retreat and this candle started being printed, everyone who bought the wick of this candle up here was trapped. They could not get out, right? Because, I mean, unless you had a stop, right, which would probably be somewhere down here or somewhere below the low of this wick, which was eventually going to get taken out, right? Because when price dumps like that, all you have to do is trap people to buy the top, force price down, which is what the bears did, and then watch their stops cascade in their long positions and then just sell off and create a candle like this. We've now seen this same playbook about twice now. Okay, we saw this right here just yesterday, and we saw this over here in this particular candle right here. And that candle is this one right over here. Okay, let me see here. That's this candle right here. Okay, this high. So watch, all right? You can see some big bag holding, you know, was done right? 6 million buy, 1.9 million buy, 1.6, 2.6, everybody over here, you know, massive buys. Then the price sold off, created two sideways candles right there, and then boom, dump and huge dump that created this big red candle that took out everyone. This initial movement like this is always sort of a trap laid out by the bears if price cannot follow back up like this, okay? If price is doing something, you know, like that and then comes back around, chances are that prices are going to push up higher because it's giving the bulls an opportunity to break, you know, the people who bought this area right here, meaning that they probably have more money and more strength. When the bears do something like this, right, they create a massive wick like this, don't let price anywhere up to those levels up here. That means there's a trap being laid. Then you see something like this, and then a massive big candle like that, okay? 2 times the same playbook played out. If you knew what you were doing and watching the markets like we do, you would have caught that move and perfectly entered a short instead of being long. It's not only important, folks, to you know, understand when to get stopped out and get out of the trade, but it's also good to anticipate and understand when the market structure is shifting and when to shift bias. The invalidations are always fairly clear on, say, the 15-minute, the 30-minute, or the 1 hour. Okay, when it does something like this and it starts re-entering back into the range, this is always my first key in understanding something is going wrong. It's time to start reevaluating your original bias. Okay, now here's another example of that. Okay, I told my Advantage community that if you did not catch the short like I did all the way up here, okay, here are some other options that you may have, okay? And you guys on YouTube will also have this option, right? So here's the thing, okay? Though we caught the short way up here, okay, around 99.20 or so, right? There's still another opportunity that you're going to get right now. And that is this. Okay, so by the time you watch this video, you will have either confirmed that this area right here is going to get rejected to the downside, or we're going to go something like this, break up through it, have to test it as support, and then take off, okay? Now, the latter option that I just spoke about is far more tougher, which is, you know, going something like this, break up, testing this as support, and then taking off. And the reason that's a little bit harder is because if you look at the overall momentum of the market, say on the 4-hour time frame, from this 10.5 high, okay, all we've really done is created a lower high, and now another potential lower high, okay? And on multiple time frames, there are key retests that we're seeing that is telling us that price is about to get ugly and bearish for the coming days, okay? But again, I will only be wrong if price does something like this, moves up, tests this as support, and then starts taking off, okay? If that happens, then that means that all this period movement right here that we saw for the last 4 or 5 days was aggressively bidded, right? Meaning that it was bought up, and then we're about to shoot up much higher, okay? However, the current price action and structure does not really denote that. And I'm going to show you guys exactly why, okay? Notice that price is hitting this key level. This was this support, right? You guys have heard the basic rule about, you know, previous resistance being turned into support, or previous support being turned into resistance, okay? So this is exactly what's happening over here. This area right here is now being turned into resistance, okay? So this, to me, if I wasn't, you know, already in a short from way up here, I would, you know, add on to a short position. Again, not investment advice. This is your call. If you're still aggressively bullish, you know, I would probably wait to see price show you confirmation or going to break up. If you want to go on a short, this is your area for you to get into a short with a stop somewhere up here, okay? A deeper stop would be just above these, this key high, or this key high right here, okay? That's one way you could go short. Another way you could go short is by price doing something like this, right? So let's dial this down on the 5-minute time frame. So remember that I just showed you a couple different ranges, right? I showed you price typically moves in ranges like this, And then when price, does something like that, if it's supposed to be bullish, it's supposed to just continue up further, right? What you could do is once price starts being reaccepted back inside this trading range, which is the trading range on the 5-minute time frame that I told you, with this key high and this key low, right? Notice that price is already above that area. So if it doesn't retest this area and then start taking off, but not only does it have to take off, it has to actually break above this key marker, which is around 98.40 or so. Okay, if price doesn't do something like that and price collapses back inside the trading range, this is your other opportunity for a short with a stop above this key high, and you can potentially ride this down to this low, or these lows right here. Okay, I am personally of the opinion that now, by now, price has already started to show us on multiple time frames that it is looking aggressively weak. It's also visible on XO, which is a L3 level data. It essentially gathers, details on what's happening on the bids and asks, the amount of supply versus demand coming in, all the way down to the numbers. And this is the BitMEX XBT perpetual futures contract. Okay. Now, if we start looking at the last few days, right? So this movement right here is this daily structure right here. This is what we're looking at right now, okay? It may not be as easy for you guys to see, but I've seen these, for the last 5-10 years in the equities markets. And it's pretty easy to understand once you start to figure out what you're looking at, what you're zooming into, and what these, bids and asks mean, okay? So if we zoom out, right, what we're seeing is, for the most part, we saw a big, 170 million positive delta candle, which was then followed by a massive negative $163 million negative delta candle. Okay, let's put on the footprint bar statistics. Let me refresh this. Let's get in more data. Okay, so remember that this has now happened twice, actually. Okay, and I'm going to show you guys. We had another plus 199 million volume delta candle right there, which was again aggressively followed by a 196 million negative delta candle right there. So what this tells me is when we start going back on the daily, right, that was this positive candle and then this negative candle. So bulls have enough strength to push the price back up. They do not have the strength to continue the price and push for higher highs, okay? Now, what that tells me is the bears are really just loading up probably on shorts or allowing the price to come back to key levels like this and then crushing it back down like they're doing right there and right there, okay? So it looks like for now, the bears are either already in control or they're really starting to get in control, okay? And that's not only visible by the price structure that you're seeing right now, but it's also visible by the XO chart and the detailed negative delta breakdown, okay? So what this tells me is we need to start being cautious now that this 9-6 area right here that I've been talking about for the last few days is probably going to break, okay? Because we've now tested it with this candle once, two or three times right there, 4 and 5 times right there, and then the 6th time right there over the last 7 to 10 days. So this is not a healthy sign when you're trying to test support and start taking off. When you spend so much time down here, you've pretty much exhausted the demand that was supposed to propel this price higher. And what you've really done is depleted those buyers, and you're about to use those buyers as fuel when you start heading down. Because what's now happened, folks, is that stops have now been positioned all below these wicks. Each one of these wicks is perfectly positioned for almost a disastrous event, okay? And I'm gonna show you guys in a detailed breakdown of what I mean, okay? So if we start looking back on the 4-hour chart, so these wicks right here represent these daily wicks, okay? And then today's wick right here is right here, okay? So what do you think is going to happen when price starts breaking this key low right here, which is the one we put in yesterday? Well, once these buyers start breaking down, okay, their stops will be hit, right? That means price will collapse even more. Then it will start hitting this level, and then their stops will be hit, and then it will collapse into this level. And then their stops will be hit, and then it will collapse into this level. So it's basically a big rolling cascading event of each buyer basically stumbling into another, causing a big domino effect where price is going to go like this, slice, 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 and slice. And this is going to cause a pretty big candle, in my opinion, that will be almost analogous to something like this, okay? And that might probably take us down all the way to this area right here, around $9,000 to $9,100. And I don't know if it's going to happen today, tomorrow, because again, the buyers have so far held their own of holding price here. They just haven't been able to be strong enough to push price from here, okay? So the bears are strong enough to, keep pressing lower highs, and that's actually, one of the first signs of a start of a pullback or a correction, right? So the fact that we're doing something like that tells me that it might be time to start positioning yourself from a long bias to a short bias. And this is why I'm short right now. And I'm probably going to be short at the very least until we start seeing either price get back above these highs, okay? Or it starts breaking below this area and it starts reacting to price over here, or rather to the stops over here. Because what's over here in this area is a few things, all right? And I'm gonna show you. Okay, so let's turn on the VWAP. Again, if you're not familiar with the VWAP, come join Cryptosomniac, folks. All the stuff we explain before we use it in the community. A volume-weighted average price, it basically gives you an average of, how, depending on which period you're in, whether you're in the year, month, week, session, it gives you an average price of how, price is in relation to the overall VWAP session for the year, the week, or the day, okay? So, and this is the VWAP for the year, all right? And I want you to pay attention where exactly the VWAP is currently. It's around 9,075 or so right now, okay? All right, so say this was the top and this was the bottom, and we've now completed, say, one big cycle, right? And we're looking for pretty much a deeper retracement. So where could price go, okay? So let's start putting that down, all right? All right, so from this low to this key high, all right, pay attention to exactly where the VWAP is and the 382 fib. The 382 fib is around, $100 just below the VWAP session. So we have some good confluence telling us that, hey, this could be a good support area for price to come down to and potentially bounce off of, all right? Number two, all right, or rather number three, is remember how I told you that most people will typically have their stops residing, either below the previous low of the wick or the previous consolidation, right? And so if we're looking at the previous consolidation, okay, the lows right here are right around that area. This black box that you see, right? All these wicks touch inside that black box. So if someone were, say, still long up here and they didn't take profit, the deepest area they'd probably have their stops is over here. I mean, they could also have them way down here, but if price is really starting to look aggressively weak, it would be wise for those people who are long to have their stops over here, right? Why wait for price to come all the way down here, right? Rather than, getting stopped out over here and then letting price continue down further, okay? So the point is that price could come down in this black box, meet the VWAP, meet the 382, and then start taking off from here, okay? Obviously, there's multiple areas in this where we can argue that price could come back, how low it could go, but we'll reassess that later. I just wanted to show you guys that this area right here, around 9,075, 9,000, is a huge area that I have my eye on, okay? So if you're shorting, that would be, the area that I'd be targeting. Again, not financial advice. You do whatever, you want, okay? But I know exactly how I am going to position myself for the coming days ahead, all right? Now, overall, even the stock market, by the way, has pulled back a little bit with the coronavirus starting to, finally hit the news and starting to impact the equities markets. We actually did a big wrap-up session in the Cryptosomniac community, go check it out. We just finished it yesterday. We talked about energy and tech stocks, what we're looking for in terms of sectors for the months ahead, or the weeks ahead rather. And we also discussed all the fiscal and monetary policies in place that are allowing the markets to be propped up. Okay, so whether you're a bull or a bear, we make the case for either one. Okay, now the reason I mentioned that is because if the bigger markets like, say, commodities and even the equities markets are starting to get hit, I have no doubt that at some point it's going to start rolling over into crypto. Okay, and the reason I say that is because crypto, by and large, is a speculative asset class. And in my experience, okay, speculative asset classes, or assets in general, are typically the first ones to start getting sold off when there's sort of an imminent threat in the overall economy, whether it's the national economy of your country or the global economy. Okay, and you could see, maybe one could make the argument that Bitcoin started to show us weak signs of weakness way up here before say the equities markets even caught on to that. Okay, but for the most part, I do believe that this area is definitely looking weak, and I do not consider this a sign of strength unless we start reclaiming key lower highs and start showing strength. Okay, until then, I'm looking for further downside. And by the way, one thing I missed is, guess what else is down there, right around the VWAP, as well as that 382 fib, as well as these stops. There's this red band right here, which is the 200 moving average on the daily. It's a little bit lower, around 8,800 bucks, but nonetheless, everything is clustered right around that 8,800 to 9,000 region. Okay, so it might be wise for you to start paying attention to those particular areas. Right, the pivot actually is a little bit lower, around $8,600. So I don't know if you can fully take that into account. I do believe that 8,800 to 9,000 is a region you want to pay attention to for the days and weeks ahead. All right, that's it, folks. I hope you guys enjoyed my content. Again, hit a thumbs up, leave me a comment of your thoughts. If you enjoy this content, come join and actually trade with us. Come learn and see how we trade, okay? Come be one of these people who actually, can post a gains review proudly and say that they've learned something from this community and they're finally starting to see results. We are not one of those communities that puts out a post once a day or once a week. You can see over here, we are fairly active every single day, whether it's a Monday or a Sunday or a holiday. It doesn't matter, okay? I do this full time. I trade for a living. I really enjoy this work, and I really love my community, okay? My community members, in my opinion, are by far some of the best people, because they are people who are not your random buy or sell signal types. Okay, these are people who actually want to learn and understand what it means to create wealth over a span of time. I've always said that trading is analogous to running a marathon. You have to train for a while, you'll get blisters, you'll feel helpless at times, you'll feel broken, but ultimately you have to keep fighting and you have to keep going. Okay, it is not a sprint where you just want to run for a few minutes and be done with the race. Okay, for trading the financial markets, any asset class at that, you have to kind of do this day in and day out. You'll have days of frustration. You'll have days, constant days, and maybe even weeks of just losing trades in a row. But if you practice proper risk management, you will do fine. Okay, your 1% risks on your losers will be greatly overcome when you take winning trades like this, where we take a nice 35% profit when we catch a big move like that. Okay, and you'd be surprised, folks, at how often, in any given week or a few weeks, we can catch moves like that, which completely erase all our losses from our previous trades. Okay, so even if you have 10 losers in a row of, say, 1% loss at a time, this is greatly masked by one big winning trade like that. And again, it will happen, okay, because that's how markets are. They don't just constantly just keep moving sideways. More often than not, they are pretty volatile. I'm pretty happy to be in a volatile market like crypto, and you should be too. Okay, So that's it. You now know exactly how I'm positioning myself. You know my bias. You know exactly the levels to look out for. All this was given to you for free. So imagine if I give you this for free, what you could be getting for the paid content, okay? And trust me, you have no idea at the amount of work and the level of information and detail that we put in to our community, all right? So do come join Cryptosomniac. Go to the website, cryptosomniac.com, hit the products page, and then buy the Advantage membership. All right, that's it, folks. Take care, hold your stops tight, and I do hope you guys are careful in this market and learning how to practice proper risk management. Y'all take care. Cheers.